So the elections are over, and right now the question that is on everybody's mind is what is next. In this video, I'm going to cover that. I'm going to give you the exact game plan on what at least I am doing over the next 3 to 6 months in order to maximize my gains in a bull run. I'm going to give you my exact narratives and sectors, in fact, even coins to focus on that I believe is going to give you the best possible chance of a return. And then lastly, I'm going to cover the 3 types of scenarios that people are most commonly into right now, which is number 1, you bought and are happy with your results right now as prices are pumping. Number 2, you didn't buy and are now feeling FOMO. I'm going to give you a game plan on what to do if that is your case. Number 3 is that you bought at a much higher price and price hasn't seemed to recover yet, and in fact doesn't seem to be showing much of a sign of recovery at all. So without any further ado, let's dive right into it. Now, starting off with the elections, I'm not going to share my political views, but Donald Trump winning is an amazing thing for crypto. If anything, if Kamala wins, like, it's over for crypto. Like, it is that bad. Now, just to give you an example, prior to the elections, about a week before, price on Bitcoin actually pumped all the way up to stop just short of the previous all-time high by literally $100. Now, there was only 2 ways that things were going to play out here. First of all, you're going to get a double top. And if that is the case, if price breaks structure, right, if price breaks this low right here prior to the elections, and then during the election day, price retraces back into this previous quote-unquote support, turn into resistance, like that would have been the top for this bull run. You want to sell everything and just, get out. That would have been the situation if Kamala won. But one of the reflections that I hope to share with you is the fact that price action tends to signal to you what could potentially be going on. There is a way for you to know the exact result of a news event just by looking at how price is reacting prior to the news event. And this is something that you can apply even to your day trading. For example, right here is a daily demand zone. Now, I'm not going to get into the intricacies of what makes a demand and supply, but prior to election day, this is Monday, 4th of November, you touch into this daily demand zone, it's shown a really strong reaction, and boom, off you go. Now, things would have been very different if, again, you break structure, and then this would have been how election day would have played out instead. Right now, we would be right here. Probably. Now, this was already forecasted by price, which is how a lot of crypto guys sort of knew that Donald Trump was going to win, other than all the other statistics, such as that every president that has ever had an assassination attempt against them, they tend to sweep votes. But other than that, like, it's just a little bit of reflection that you can use for even your intraday trading, such as, for example, if you're trading intraday and, the CPI report is coming out in, let's say, at this point here, sorry, that is a horizontal line, then you know that if price action is leading into some kind of key area right before the news event, and if price taps into that key level and then shows a really strong reaction in the way that you might be anticipating, then boom, right, you're gonna have an idea that maybe the CPI, like, more likely than not, the CPI is going to be a bullish thing and not a bearish thing. So it's just a little bit of a reflection. Now, moving on to the question of what's next. Now, the fact that Donald Trump wins, this is really exciting times because it's going to kickstart a bull run like you've never seen before. Everything has already been setting up for this potential victory by retracing literally from like March until right now. Most coins are down between 60 to 80%. Now, this is every single coin out there, including the top performing ones like meme coins. Now, the other thing that you want to keep in mind is that some of the best times, contrary to popular opinion, to get risk on and to just buy in and go all in is not actually close to the bottom. Like, sure, it's cool to catch a bottom, but in that process of catching that bottom, you are going to lose so many trades, or you're just going to end up back holding, which is not great. Now, what about if you flip the script? What is the time that Bitcoin is going to give you one of the highest possible confirmations ever? It's right before an all-time high, especially when you form relatively equal highs right near the all-time high. Now, the best time to go risk on is actually right before the Bitcoin all-time high gets taken. Of course, as Bitcoin currently is in price discovery, it's super bullish for the rest of crypto, and this trend is very likely only going to continue for the next 3 to 6 months, which leads me on to my next point, which is seasonality. Now, throughout this whole bull run and throughout this whole year, a lot of people have been talking about, hey, Q4, Q1 is really great for buying crypto, Q2, Q3 is really, bearish for crypto. And that is true. And you see this across multiple years of price action on not just crypto, but even on stocks and sometimes on indices. And so right now, the fact that everything is lining up, okay, you have a retracement period of 6 months from Q2, Q3. Now, basically everyone has lost interest in crypto, and currently people still haven't came back to crypto due to this. Now, number 2, you have Trump winning, which is exceptionally bullish for the crypto markets. And number 3, you have seasonality. We are currently in Q4 right now and going into Q1 of next year. Now, if you guys remember what happened this year, early this year, in January and February, you basically saw a lot of coins basically go parabolic, including WIF went up by 20x in the course of a couple months. You have, many more examples, and that's about to come. In fact, it's going to happen on a much bigger scale because Bitcoin's in a new all-time high. It's in price discovery. Everything's just lining up. This is one of those times where, you really just want to focus on going all in over the next 3 to 6 months. Again, this is just what I'm doing. I'm not going to personally recommend any sort of financial advice or whatever, just sharing what I'm doing here. So this leads me on to the next point, which is exactly what coins to focus on, because there's no point putting your money into something that is, underperforming. For example, Ethereum against Bitcoin. Like basically since the start of 2022, your money would have been better invested in Bitcoin compared to Ethereum. Throughout this entire process, Ethereum against Bitcoin has underperformed by about 60%. So obviously you don't want to be holding on to a coin like this. You have many examples. Injective, right? This thing is still very much trying to recover back to its previous high. And meanwhile, you have coins like Popcat, which is very close to breaking a new all-time high at the moment. And you have just options. There are tens of thousands of coins out there, including shitcoins and the meme coins. You want to be focusing on the right sectors. And the key thing to picking the right narrative or sectors is one word: attention. Now, crypto is very sentimental. 99.99% of the time, people look at some very fancy, complicated fundamental research like Chainlink, Web3, Oracle, data, programming, AI, whatever. And they're like, no, I'm not going to read that. People look at a picture of a dog or a coin. Oh yeah, this is pumping. I buy into that. That is just how crypto works. It's purely sentimental. It's purely run on narratives to the point where fundamentals really do not matter. If anything, pump mentals are the only thing that matters. An ingredient that makes up most of pump mentals is this word called attention/mindshare. So the key here is that you want to look for coins that have a lot of mindshare. For example, WIF this time around, everyone thinks is going to become the next Dogecoin. It's currently only at $2.5 billion worth of market cap. Dogecoin went all the way up to 60 billion in the last bull run. Now, not to do any projections here, but it would be very unreasonable for us not to expect WIF to hit maybe $10 or $15, putting it about $10 to $15 billion worth of market cap. So right now, it's not a bad time to get into WIF. You have a lot of mindshare. You have a lot of attention. It is still very much the leader of all of the meme coins from this cycle. And one last thing to remember is that throughout the course of a bull run, 80% of the money tends to flow into the leader. The leader of every sector tends to be a lot bigger than the number 2 and number 3 combined. That's just how the world works. You got 80-20 rule or whatever. If you can find a leader where it's already high market cap, plus the fact that it has a lot of mindshare and attention still, even at this high of a market cap, you have got a recipe for a winner. And these are the types of coins where you can afford to put a bigger position size and just hold for longer with much higher conviction. WIF is one of those. You've got Popcat, just to name another meme coin. This one's a cat coin. We have never seen the likes of a cat coin performing this well ever in a bull run. So this is unprecedented. Again, it is the leader in terms of cat coins. Something to think about. Now, another way that you can find coins to focus on, stuff that is going to be much higher probability of giving you some kind of return, is to look at what coins performed well throughout the first half of the bull run. Based on the data that we have 3 just big winners in terms of performance. These sectors have consistently outperformed everything else, and that's going to be meme coins by far, number 1. Like, if you had to just pick one sector to get in, meme coins is my personal bet. It just lines up with the whole narrative of the bull run. But if you want something a little bit more fancy, then real world assets have been doing really well as well. Now, you're talking about Pendle, you're talking about Ondo, you're talking about TokenFi. This is pretty much the future of crypto. And right now, they have a pretty good use case, pretty easy to understand, and just have real world assets has a lot of mindshare in the crypto Twitter community, as well as the overall crypto community. But the thing that makes real world assets great is that they are very publicly, explicitly backed by BlackRock and all the other institutional investors. This is their baby. They will make sure that it grows, and they will make sure that it gets the money it needs to do that. So Pendle, Ondo, my personal picks. Now, I just pulled up a narratives dashboard that keeps track of, the top performing narratives so far this bull run. Now, the results recently have really been skewed a lot because of a Bitcoin pump. Like, Bitcoin was never here for like the last 9 to 10 months. Recently it made it. You have also a lot of liquid restaking protocols, such as, wrapped stake ETH or whatever, that pumped a lot due to the recent events. Coin narrative, again, due to recent events. But for the most part, the most consistent outperformers throughout this entire bull run, number one is memes by far. Like, this chart used to look like this, basically, like with memes here and then real world assets here. And then number three would be just a shakeup between AI and, in general, layer ones, which I'm going to get into. AI is, well, the hot thing of this bull run. Nobody really understands what it does. Nobody really even cares about what it does, but it doesn't change the fact that it has a lot of attention. It has a lot of mindshare. TAO, for example, Bitensor, is a really good pick if you want something a little bit higher conviction. Render is an awesome pick. It's sort of like the saying of, like, when you're in a gold rush, you don't want to be one of the miners, you want to be selling the shovels, and Render is that type of token. And then you have layer ones. Personally, you cannot go wrong with buying Bitcoin and Solana. There is, like, the amount of mindshare Solana has acquired. Like, for the first time in forever, people start believing in ETH. You have even the most hardcore Ethereum maxis just shifting out of ETH and going into Solana. And there is a very real possibility that Solana just completely outperforms Ethereum. Heck, the flippening might even happen for Solana and ETH. So there is one coin that I would put my money into. Like, Solana would essentially be like what AVAX and BNB and Solana would be compared to ETH in the last cycle. ETH was just like, it's doing well. Like, you're not going to get 10x gains out of it, but you were going to get a pretty solid 2 to 3x. Solana, same thing right now. From current prices, like, if you bought way lower, then yeah, sure, you're going to get a 5 to 10x. But at current prices, it'll very likely, 3 to 5x from here, putting Solana at about $600 to $1,000. That is, $600 is very realistic, by the way. And Ethereum, if it were to, 2 to 3x from this, well, let's just say that it has a lot of work to do. And Bitcoin, of course, like, it's not going to give you a 3x, but it's going to give you a relatively safe 2x. So those would be the coins that I would focus on. And now let's talk about the three types of people. I believe that the majority of you that are watching this video right now falls under one of three categories. First, you bought and are happy with your results now. There's nothing much else to do. Right now, what you need to understand is that macro movements tend to happen throughout quarterly cycles, meaning if you bought and it's like currently we are only about a month in, like the pump really started at the start of October across many different coins. For example, looking at Bitcoin, yeah, sure, it started at, the beginning of September. So that puts us about 2 months in. Again, going back to seasonality, there are quarters that are really bullish for crypto and there are quarters that are not. Keyword, quarters, at least 3 months and maximally 6 months. So if you bought at a much lower price, right now is not the time for you to start thinking about taking profits. If anything, the pump has just begun. You want to wait until your price just goes really parabolic and you start seeing exit signals before you even start taking profit. Now, on the note of taking profit, it's actually good for me to just share a couple things on taking profit, because this is something that I have written recently. By the way, if you guys want to get all of these like in-depth reports for absolutely free, it's in my newsletter. Feel free to sign up just in the description box below. Exit plans. So number one is you want to look like before any of these conditions are met, you do not want to be thinking about exiting at all, like seasonality aside. First of all, with market structure, like when we're dealing with macro shifts in structure, we only use the daily chart and above. And once structure is broken on the daily, it's usually a good signal to exit on the next bounce. Now, take a look at this. Now, specifically, instead of just looking for a break of structure, I want you to look for a broken base, because this happened in the last, 2 top signals. And I can give you many more examples of a broken base being the exit signal. And so what you want to look for specifically is some kind of a liquidity level. You sweep that level and then you immediately make a strong move to break structure. Same thing here. You have a liquidity level over here. You sweep that level, immediately proceeds to break structure. Now, this is one of those moves that just scream institutional involvement. Like, there is no way retail is able to do this. First things first, you need to understand how much money and how much power you need to move the market this strongly for like $10,000 on Bitcoin at the time, which was close to $1 trillion in market cap. You need a lot of money for this to happen. And this is not accounting for all of the buyers that are, quote unquote, buying the dip at every single point of this equation. So liquidity sweep followed by a breaker structure. This is a broken base. This is a really great exit confirmation to just start getting out. Like, for example, get out on the exit bounce. You can also get out right as the structure is broken. But even if you just use breaker structure, it can work. Just understand that you are going to get some false signals like over here. You also get some false signals like over here. And the way that you prevent these false signals, if you're just going to use breaker structure and just market structure, is to look for a daily candle close. Like this here is just a wick. There's not a candle closure underneath this level. Notice how this is a candle closure. So this is a confirmed breaker structure. Same thing here. Only when price closes a candle above it, that is a breaker structure. Now, liquidity sweep is different. You do not need to have a candle close. In fact, just a wick would be enough to be a liquidity sweep. This also worked back in 2017, where you have some kind of liquidity sweep right here. Now, this is not the breaker structure yet. These are all just wicks. Once you break the structure, exit on the exit bounce at any sort of key level, and that is the recipe for you to start exiting. So until you see this happen on any coin, like this is the cheat code, by the way. Until you see this happen on any coin, you don't really want to get out yet. All right. Number 2 is your portfolio targets. Now, I'm sure all of you have some portfolio level targets in mind, like can be conservative and can be really ambitious. What I would say is to temper your expectations. From this point moving forward, you're very likely going to get a 10x if you are invested into the right sectors, such as meme coins, even the big ones. There's a real possibility of doing a 10x from this point onwards. But if you're in narrative that hasn't been performing so far, you might want to be more conservative. I'm actually going to talk about how to decide what coins to cut out and what coins to keep later on. Once those portfolio level targets start getting hit, you can begin cashing out. Sure, you're not going to catch the top of the bull run, but the only thing that really matters, and this is something that beginners rarely understand, is that the whole point of a bull run is just to exit heavier than when you got in. It doesn't matter if you don't hit a 50x, like all of these, success stories that you see on Twitter. And in fact, you shouldn't even be, focusing on these success stories, because at the end of the day, only the winners get their story shared. Nobody wants to hear about a loser, right? This is called survivorship bias. Stop looking at all of these people getting 1000x. Focus on yourself. Focus on what you can realistically achieve with your portfolio. If there is one tip I can give you, it's right there. Third way to just get into exit plans is probably the most difficult one, because it all ends up just being a guess. There is absolutely no way to accurately predict how high any given coin can go. Because this is such a subjective measure, it's really easy to fall prey to biases. Now, over the years, I've found it best not to use this on its own, but paired with other confluences, such as seasonality, market structure, and macro, which is exactly what I just talked about in this entire video. Seasonality, we're in Q4, Q1 now. Market structure, you know exactly what to look for. Macro, right now, Donald Trump, everything, the economy is lining up for a really explosive bull run. And while you can draw comparisons from performance of other coins in the past, such as, if Dogecoin can hit $60 billion, then what stops WIF from hitting, 1/5 of that? Oops. Not ship. But just one thing you need to remember is that every bull market is still a completely different beast and should be treated as such. The goal is simply to get close. It's near impossible to nail the top, and even if you did try, you would either end up taking profit too early or taking profit too late. In both cases, you just get burnt. So neither are ideal, and it's not wrong to aim for perfect, but you must really reframe the meaning of perfect in a bull market or in trading in general. Perfect means having a plan and executing that plan. If you are able to do that, that is already a perfect trade. Because guess what? When you made that plan to get into the trade or the investment, you had an idea in mind, right? You had a scenario in mind. And if it plays out exactly as you thought it would, boom, that's perfect. You cannot ask for more. And good is simply just leaving the market, like leaving the bull run heavier than when you came in. If you can achieve either one, you've really already outperformed 90% of people in and outside of crypto. Most people in crypto, sure, they have really high unrealized P&L, but rarely do you see cases where people actually walk out with those gains in a tangible form. And then you have the flip side of the equation. All of these guys holding stocks and, not in crypto, well, at most they're going to get like 20% this year. And even if you just leave for 20% this year, like you're already good. So hope that helps. That was a bit of a tangent. So yeah, that's the game plan for the first type of people, for the first type of person, which is you want to maintain your risk on mode. You don't want to take profit too soon and only start taking profit when the time is right, because you can get burned by taking profit too early. You just shoot yourself in the foot, basically. Number 2, you didn't buy and are now feeling FOMO. What to do? Now, first of all, the people that are in situation number 2 struggle from what I like to call high IQ. People that win in a bull market are not the people that are the smartest. It's simply the people that are able to see attention for what it is, see fundamentals for what it is, see that attention is flowing here, see that the coin is going to go higher, and they just buy high and sell higher. This doesn't work for people that are rational and really high IQ. They're like, okay, this coin was $200 million worth of market cap, 3 months ago, and now it's at $1 billion. So this is expensive. So price has to retrace. No, it doesn't, you idiot. You're in a bull run. things go up. Rarely do you get any sort of an 80% retracement, and like you fail to see the bigger picture, which is that thing like from $1 billion, sure, it's expensive compared to $200 million, but you can do this infinitely for every single coin. Oh, Bitcoin's at 75K right now. It used to be $2. Yeah, no shit. Look at the bigger picture. You understand that things are going to go much higher from here, and what is $1 billion right now, if you didn't buy in, could be worth $10 billion in the future. And this is a risk that you have to take on. And as the famous saying goes, no risk, no reward. So bigger picture aside, what is the practical solution to, buying into coins? Well, I'm going to give you the guide for right now. Now, I want you to focus on this chart right here. Now, every single red box here that I drew out is what is known as a bearish order block. Now, I want you to notice that throughout this entire downtrend here, every single bearish order block is respected. Rarely does price go much higher above the order block, and even if it does, it's really just a wick, but even then it's still rare. For example, you have the order block starting from here, price wicks into this order block. Now, the only reason why it wicks up and breaks this high is because it's wicking into a previous order block. And then boom, right? You go down, again, now you create another supply zone. Price did not break above the supply zone whatsoever. Go down, create another supply zone. Price spends literally a couple months inside the supply zone, eventually tries to break out, fails, boom, goes lower. And then boom, now this supply zone has not yet been broken. Price comes into it again, goes down. Now you form another supply zone right here, and then price comes into this area, fails to break it. Now this is something known as order flow. If you take a look at Bitcoin even, you will see that the order flow on Bitcoin is really bullish ever since we started this uptrend. Now, just to give you an example, you have this entire, let's say we only start drawing it from this point onwards. Right here, you have a demand zone. Price comes into the area, boom, goes up. So this now becomes the demand zone that price can hold if price were to come back to this area, but hasn't yet, and it's very unlikely that it ever will. And then boom, you have another demand zone. Price comes into this demand zone. Like if we refine the zone down to the exact demand block, then this is what you get. And now this entire block here has become a new demand zone. So this is how order flow works. One thing you need to understand about how the markets move is that markets are driven primarily by institutional investors who have the huge amounts of capital to make things happen, such as this. Now, retail is not going to put any sort of a drop in the bucket when it comes to moving the markets. And so when you follow the institutional investors, you want to follow the order flow. How is the orders flowing? Essentially, this is just a fancy way of me telling you that if you have not bought in yet and you are feeling a lot of FOMO, buy the dip. But buy the dip in this way, right? Use these demands. All of this is done on the daily chart, by the way. Do not even try to do this on the 15-minute chart or whatever. There is a difference between trading and investing. You're not trying to invest based on a 15-minute chart. It's a lesson I had to learn the hard way. I really hope you don't do this. I know you want to make money quick, but making a 5 to 10x over the next 3 to 6 months is really already very quick. 5 to 10x is a 500% to 1000% gain. It takes the stock market about 50 to 100 years to do that. So look at the bigger picture. I know you want to make money quick. I know you want to change your life, but if you do this wrongly, it's like going back to one of my favorite sayings ever, which is, it's like your desire to make quick money is going to prevent you from making big money. Sure, if you have $100, you turn it into $200. Yeah, sure. Now, if you have $10,000 and you make all these silly decisions to, do it quick, and maybe you end up with a bull run with 20K. Or even 30K. What if, on the flip side, you focus on the right fundamentals, you focus on all of the things that I shared in this video, and you do things the right way? Sure, it's going to take multiple months until you see any sort of result, but maybe at the end of the bull run, you walk out with 100 Gs or 200 Gs. That's a life-changing amount of money. Again, do it right. Don't try to do it quick. There is a saying in the US military, slow is smooth is fast. Go slow, do things the right way. So that is if you didn't buy it and are now feeling FOMO. Again, big picture, and I've given you the exact technical blueprint on how to, just buy the dip. So number 3 is that you bought at a much higher price and this coin is not reacting whatsoever and you're wondering what to do. Now, this is a more complicated situation because this is very subjective. So what type of coin did you buy is a really good question to ask. Does that coin fall into one of those top narratives from this bull run? For example, DeFi 2.0, real assets, memes, AI, layer 1s, and now the rest of this is not really worth looking at. For example, let's say you're holding, Litecoin or Chainlink or something, and it's absolutely not doing anything. In fact, throughout this whole bull run, you have had quite literally a year's worth of sample size and data to show you that these are not narratives that are being prioritized this bull run at the moment. And so, in this case, what do? Well, now you have to have a hard conversation with yourself. I want you to think of your money as soldiers and the bull run as a little war. Now, the way that you win a war is that you want to allocate your resources to areas where they can best make the most impact. You don't want to be, for example, throwing 10,000 of your soldiers into an area where the opponent isn't even going to attack or has a zero strategic value. Well, you want to think of your money in this way. In a bull run, your money is every single dollar that you have is working for you. And it's your job as the general to allocate that money to somewhere where they can make the most difference. When you have coins that are absolutely dead, they're down 90%, they're down 95%, and you're just praying that they're going to come back. But if there's no objective sign, or if there's no rational sign, or just again, based on your research, you got to have a hard conversation with yourself. If there is no real reason for that coin to just come back to life, maybe it's time to cut it. Because sure, you might have just realized a 90% loss, but that 10% could return back to, you could 3 to 5x that money in the same time that coin would take to pump 20% or something. But again, there is no real right answer to this. It's just making the most of the information that you have available. There is always going to be some kind of risk. You are never going to be perfect. But again, if you have that conversation with yourself, if you come up with a plan, and if you execute that plan, then it's already the definition of perfect. On the flip side, if that coin is part of these top narratives and are simply just, not performing yet, then here's one other thing you need to understand about crypto is that it's cyclical. Prices move from money tends to flow from Bitcoin to, the large caps, to the mid caps, to the low caps. Same thing for narratives. You saw this early this year. Prices would pump heavily into meme coins for a 2 to 4 week period before flowing into other narratives. Crypto is cyclical in this way. So if your coin is in a strong narrative and has already shown signs that it has performed well throughout this whole bull run, and it just hasn't started performing yet, then maybe it's just not its time yet. And that is a coin that you can potentially hold on to. But again, you still want to review your portfolio and have a conversation with yourself. Is this the best way to allocate the soldier? And if it's not, well, the people that are able to cut the losses, well, guess what? You probably need to cut it. And deep down, a lot of the times, you know exactly what to do. Your intuition already knows what you need to do. We just oftentimes don't have the courage to take action on what our intuition is telling us. This applies for many things in life, such as a breakup, a toxic friendship, your job. Your intuition already knows what is best for you and what you really want to pursue. Could even say the same for crypto and the coins that you're holding. All you need is the courage to take a good, honest look, don't shy away from the truth, and, pull the trigger. That's how you win in a bull run. It's not going to be perfect. It's probably going to be painful when you realize that negative 90% loss frees up your money and opens up your future to match more possibilities. Anyways, guys, if you've watched until this point so far, I'm sure you've gotten a lot of value. The bad news is that this video is coming to an end. But the good news is that for my longtime followers, I am working on bringing back the best trading education group out there, back for absolutely free. For longtime followers of this channel, you would have known what is this thing called Trading Accelerator. It's a free course that I used to do where I give away all of the secrets. I literally just give you my step-by-step trading system that you can use to make profit in the markets, and for absolutely free. Now, an interesting statistic is that 81% of the people that have joined Trading Accelerator and actually taken the modules have started winning trades. I will be bringing this group back sometime during the end of this month or early next month. Because of the amount of demand this group is going to get, I am going to limit the intakes to about 100 people to 200 people per intake, which means the earlier you get on the waiting list, the earlier you're going to be let in. If you are interested in this whatsoever, again, it's completely free. Feel free to sign up in the link in the description box below. But until then, drop a like if you found value from this video, and I'll see you in the next one. Bye-bye.